Hello and welcome. You're watching The Money Show, your one-stop destination for all your personal finance queries. I'm Kavita Thapliyal, and today it's a very special show because we'll be focusing only on our viewer queries. So just in case you're watching the show live, you can send across your questions on our WhatsApp number, which is 8657974571. You can also email us your queries on themoneyshow@etnow.tv. It's a live financial planning session, so all you have to do is just send across your financial details so that our experts can help you align your investments with all your financial goals. All right, so to answer your portfolio queries, I have with me Pankaj Mathpal. He is the MD of Optima Money Managers, and I have Abhijit Choksi, founder Stockify.in. Good evening and welcome to the show. And let's begin and let's take Neeraj Darshan's question. And I believe both of you have Neeraj Darshan's question. Okay. So do we have him on the phone line? I think it's an email query. The portfolio says that he has been investing since 5 years and willing to invest for 8 to 10 years more. And he wants to know which fund should he be stopping his investment in. So he has Murray Asset, large and mid cap, Access Growth Opportunities. He's got Parag Parikh Flexi Cap, SBI Small Cap, Kotak Emerging Equity, Kotak Equity Hybrid, Motilal Oswal 500. I think we should be flashing the funds detail and the portfolio details on the screen as well. He's got Tata Small Cap, he's got Motilal Oswal Mid Cap as well, and he wants to know which fund to stop and what should be done with that particular amount. And he's got some. Okay, so that's the question. I think Pankaj, you can go first, and then later on we can also ask Abhijit as to what should be the way ahead.
See, Kavita, he has 9 funds where he has active SIP. Plus, there are 6 more funds where SIP has been stopped. So, total 15 funds are there in the portfolio. Though funds are good, but having so many funds in the portfolio may not be a right strategy. So, I'll suggest him to discontinue SIP in some of the funds. For example, he has Motilal Oswal Nifty 500 Momentum 50 Index Fund. See, this momentum strategy works well in the bull market. So, considering the situation now, I feel that he can stop his SIP in this fund. In addition to this, he also has good exposure in mid cap fund. So, if out of 2 funds, one, because both the schemes are good, one of them he can stop, which will reduce some exposure to mid cap, and in he can replace that with the Mirae Asset large and mid cap fund. So large and mid cap fund will have essentially some allocation, minimum 35% in large cap. And if we talk about this Mirae Asset large and mid cap, it has larger allocation in large cap. So that will be a better choice. So 2 funds he can cancel SIP in. One is Momentum Fund, Motilal Oswal Nifty 500 Momentum. And second will be, as I said, mid cap fund. So these 2 he can replace with one large and mid cap fund. Out of these funds where he has stopped SIP but holding that investment, see, most of the funds are large cap. So he can continue at this moment because markets are volatile. So holding investment in large cap can be a right choice at this moment. But if he doesn't need money for at least next 4 to 5 years, and later after 1 year, 2 years, when he feels that markets are like stable, then he can think about switching from there, or we can take decision based on the situation. But right now he can hold his investment in those funds.
All right, Abhijit, I think you also have a plan ready for our viewer. What are you suggesting?
Right. So as I can see, there are too many number of funds, right? So first, I would advise him to club the similar looking funds. Like if let's say someone has more than 3 large cap funds in the portfolio, it's better to club all of them into one. And I second sir's advice that right now, because of the market uncertainties, it's a very ideal to have a large exposure in large caps rather than having small and mid caps. And I've seen repeatedly in almost a lot of queries that people have disproportionately high exposure in small and mid caps. So this is the time to cut down on them and at least focus on large cap, because see what happens whenever FIIs will return. Um, Eventually, once the consolidation phase is over, they start with large caps, and also the large quantums are easily being bought. So in general, also I would advise to have more large cap exposure than small and mid caps. In his case, also I would suggest him to trim down, and after that he can continue his SIPs in once he has clubbed down all his portfolio and consolidated them into at least 6 to 7 portfolio max of the mutual funds.
All right, let's move on. And I think we have a viewer online connected from Bangalore, Vijay. Hi, Vijay. Good evening.
Good evening, Kavita. How are you?
I'm doing good. How are you doing?
I'm doing good.
Thank you so much for sending us your question, Vijay. And you have selected 3 funds for investment, which is Kotak Multicap, Parag Parikh Flexi Cap, and Nippon Large Cap for 4 to 5 years.
Okay.
And you want to
Yeah.
invest 10,000 in each of these funds.
Yes.
All right, so we will help you with the kind of investment you want to do. And I just want to know,
Okay.
4 to 5 years is the only time that you are willing to give to equity, or you can go beyond this time
See,
frame?
okay. This is my plan. In business right now. I'm planning to go for 5 years. Maybe after 5 years or 4 years, I may extend it or change the plan, change the mutual funds. So that's what my plan right now. So can I hold that whatever what I'm going to purchase it right now, or change it after 5 years? How it is going to work?
So,
And
so you can definitely invest right now. The only reason
yeah.
why I'm asking you is because it's 4 to 5 years. Equity can be too risky. You want to
Okay.
modify your portfolio, you want to change your portfolio. That can be done depending on the market trajectory, market movement, and the kind of returns you're getting in the portfolio. You can definitely switch to a different fund even after 6 months if you see the performance is not good, if you're not happy with it. But just as an asset class, it's always recommended that you have at least 7 or more than 7 years time frame in your investment. So if you're willing to give that much of time, then maybe equity is the way for you, is the route for you, equity mutual funds.
Yeah, I'm okay with going beyond
Sure.
7 years and maybe 10 years also, no issue.
Okay.
And
All right.
I
So
have few more
yeah,
questions, like
sure.
additional to this. See,
Okay, so
right now the
let me
markets
just,
are
you can tell me the question. I will note it down because we don't have those questions on us. Yeah, you want to know
yes,
whether direct or regular fund is the right choice for you or not. Is that right?
correct, correct.
Okay. So have you been an investor earlier? Do you know how equity market works? I mean, not mutual funds, but are you aware of the share market? Do you track the share market?
Yes, I do it very rarely, not really.
You
So
have a
just
stocks
have idea
portfolio?
about that. No, I don't have anything. And I have some mutual funds for ELSS, this one that is going good right now.
Okay.
That's the only idea I have right now. And also tracking the markets very often, and the markets are down about 2,000
Right,
points from this one right.
right.
So this is the right time also to invest in lump sum amount, maybe 1 lakh right now for a particular mutual fund, whatever mentioned
Okay. Okay.
the mail.
Okay. 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 So the only difference is that obviously there'll be some difference in your NAV also, because a regular plan incorporates a lot of other expenses of a distributor, broker, etc., which a direct plan will not. Are you okay with tracking all of these funds on your own? Can you do it on your own? Can you strategize it on your own? Are you confident enough?
Yes, yeah, sure. I'm confident about this fraction
Okay.
for the
Then
mutual
maybe
fund.
direct plan is the way for you, but then let Pankaj answer this question. Pankaj, what do you recommend?
Yes. So let's start with the second question first. So regular or direct is a long debate and always means uh, investors will have different views on that. But see, when see expenses are in both the choices, the portfolios are exactly same. When you invest in direct plan or in regular plan, underlying assets will be same. If you're talking about, for example, ICICI Prudential Blue Chip Fund, it means whether it's a regular plan or direct plan, both the schemes will have same stocks in their portfolio. But the difference is between expense. There are multiple expenses, for example, like marketing expenses, distribution expenses, or there are operational expenses. So total, which is known as total expense ratio, it can go up to 2.25% in equity fund. Now, if you talk about direct plan where other expenses will remain same, but because there is no distribution cost, so expense ratio will be little lesser compared to regular plan. So if you talk about expense ratio, no doubt that in direct plan expense ratio is lower, and because of that NAV will grow faster. Your returns will be little more compared to regular plan when you invest in direct plan. But the difference is you will not get service as you get from a distributor when you invest in regular plan. You may not get advice because you are investing directly. And more than that, what I'm observing right now, see, when markets are volatile, investors need hand holding. When you invest through your broker, through your distributor, if you want to redeem, if you are not very comfortable based on the market condition, you talk to your distributor, they may guide you, they may give you more confidence to stay invested. So I feel that investors who do not have very good knowledge or long investment experience, it makes better sense to invest initially at least through their mutual fund distributors. But once they have good idea about the market, they do not have emotional biases. In that condition, you may consider investing in a direct plan. Now coming to your first question, the schemes which you have selected, whether these are good or no, say I'll tell you all three schemes, Parag Parikh Flexi Cap Fund, Kotak Multi Cap Fund, as well as Nippon India Large Cap Fund. All three funds are good and one of the best schemes in their categories. But as Kavita asked you initially, if you really want to stay invested for long term, 7 years, 10 years, or beyond that, then you don't need to change anything. You can continue your SIP in these schemes. But if you want to invest only for next 4 to 5 years, in that case, my suggestion would be you should replace Kotak Multi-Cap Fund with Kotak Multi-Asset Allocation Fund. Because in a multi-cap fund, essentially 25% in each market segment will be allocated. Means minimum 25% in large cap, minimum 25% in mid cap, and minimum 25% in small cap. And considering the market situation, and you are investing, you are starting your investment now, my suggestion would be that you should avoid right now your fresh investment in small cap or mid cap. So that is why multi-cap fund can be replaced with multi-asset allocation fund, and multi-asset allocation fund invest in equity, gold, and debt. So that can be a good choice for 4 to 5 years. But if you want to stay invested for long term, then all three funds which you have selected may be good choice.
All right. Vijay, are you still there on the phone line with me? Are you clear
Yes.
with your portfolio changes? Okay.
Yeah, I'm very much clear about the portfolio changes. One more question right now for
Sure.
me. See, the market is right now, I said you right. Market is down about 2,000, 3,000 points right from the high. So
Right.
can I go for lump sum investment in any of
Maybe in a staggered way. Yeah, maybe in a staggered way you should, Pankaj. How should he break down?
Exactly. I agree with you, Kavita. See, first thing, large cap and multi-asset allocation fund or a hybrid fund you should consider, because if you go for small cap, mid cap, I still say that the valuations are expensive, especially in mid cap and small cap. So if you invest in lump sum, it may be very risky right now. So large cap can be considered, and along with that, as I said, multi-asset allocation fund, dynamic asset allocation fund, these can be good categories. And that too, not in one day, you can spread it over next 4 to 5 months. That can be a better choice.
All right. All right, Vijay, all the best with your portfolio. And with that, let's take a quick break, and post that we'll be taking Money's query for Abhijit. And before I slip into a break, I'm going to flash our WhatsApp number and email ID so that if you're watching the show live, you can send across your question with all your financial details so that we can help you plan your financial goals. Welcome back. You're watching the Money Show, and it's time to connect with the other viewer. In fact, let's take Money's question from Bangalore, and Abhijit will be answering this question. He's got a time horizon of 10 years and want to accumulate 3 CR. Abhijit, he's investing in ICICI Blue Chip, Motilal Oswal Large and Mid Cap, SBI Multi Cap, SBI Aggressive Fund, and Nippon Small Cap. He can also increase the investment amount by 15,000.
Right, so again, as we can see here, he's holding 6 mutual funds. That is fine. But if we calculate the percentage-wise allocation in a small and mid cap versus large cap, which is in ICICI Blue Chip, the ratio is extremely dangerous. Like he has almost 75% exposure in mid caps and small caps. So what I would advise him to reduce that exposure by removing some SIPs from Motilal large and mid cap. Let's say if he's doing 20K monthly SIP, maybe 15 or 10K he can remove from there, and additional 15,000 which he's planning to invest. Instead of getting into any new funds, I would suggest him to divide that corpus equally into ICICI Blue Chip and Parik Flexi Cap, so that the percentage wise balance in the portfolio would lean towards large cap, which is advisable in such kind of markets. So that is one suggestion for him. And his question was whether his target is achievable. So absolutely his target is achievable, provided he's able to do 15% SIP, a step up SIP mainly. So then within next 10 to 12 years, he will be able to reach his targets if he's consistently doing the SIPs. And if he has any other question, please let me know.
All right, so reduce your exposure to small and mid caps. Okay, let's move on and let's take Divyesh Chapaneri's question. And Pankaj, very interesting question for you. He's asking that is there mutual fund which do short sales with their invested money?
See, this question is not very clear to me what he wants to ask, but if he's asking about the short selling, like in future, is long to buy and short to sell. So I'll say that mutual fund do not do that kind of short selling, but yes, they has the portfolio with options. So many schemes like arbitrage, if we talk about, so it does that only, selling in one market and buying in another market. And similarly in other funds also, especially dynamic asset allocation fund or some other funds, there can be a hedging of portfolio where you sell in one market, buying another market through option strategy. You do that hedging, so that is possible. But if he's asking directly like short selling where you do not have something and without that you sell, that is not allowed in mutual fund.
All right, I think that will be the last question for the show because my time is up. But thank you so much, Abhijit and Pankaj, for helping our viewers plan their finances and, in fact, giving your recommendations and suggestions on their financial portfolio. With that, it's a wrap on the show as well. But I'm going to leave you with our WhatsApp number and email ID where you can send across your questions and we can help you plan your finances and your financial portfolio. Thank you so much for watching. Goodbye.
If you like this video, then like, share and subscribe to ET Now.